GM. So the markets are not moving. It's very quiet. It's not the time to overtrade. You have OPEX on Friday, so you see volatility dampen and dry up as we head closer to that day with the big levels between 80, 85, and 90K. So you see price is being pinned right now between those levels. You've got a public holiday in the US. So stock market on Thursday will be closed and half day on Friday. So this is the last full session before December on Monday. I know that's gone quick. So that's the full analysis, and I'll see you guys tomorrow. Now, no, of course not. I wouldn't do that to you guys. But we have to zoom out to the high time frame today to analyze the markets because there's really nothing going on low time frame that I didn't already talk about yesterday. So Bitcoin. When we go to the 12-month chart, the yearly chart, what are we seeing? Well, we've got a red year right now, and this has never happened in one of the bull market years if cycles and 4-year cycles are anything to go by. So this year is seen by investors really as a failure. The reason for that is because, again, everyone expected 2025 to at least be a green year, and maybe it will be. We've got a month to go, but I think it's safe to say we're probably not going to go anywhere near 120 or 125 or new all-time highs before 2025 is done. And that then leads to risk-off sentiment for the rest of the year. Traders are going to be less likely to start piling in on longs with 1 month left going into 2025 when the year is seen as a failure. Now, that doesn't mean we can't have rallies and bounces, as I talked about yesterday. That's actually what I'm expecting here, and I think longs favor over shorts, and I gave all the trading setups that I'm looking at there, but it is a risk-off end to the year now because you don't have that bullish reflexivity as you go into the end of the year where charts are moving up, price is trending higher, Q4 is bullish as it's typically expected to be for Bitcoin. You've got the opposite. So who's going to just massively prop up this market going into the end of the year? I don't think anyone. I think if anything, you can see a bounce, as I said, short squeezes, clear out some hedges, but it's time for volatility to drop and actually for price to go into some sort of reaccumulation, whether that's from here, whether that's from lower, I'm not sure, but it is becoming now a game of patience because we've been blessed with volatility for the last few weeks. This has been beautiful. As a trader, you just need the markets to go up or down. You need them markets to move. It doesn't matter whether it is bullish or bearish, but you do need volatility. You do need it to move to be able to make money. And we've had a lot of that. We've been blessed with it. And when you get blessed with volatility for a long amount of time, typically that reverts, just like any market. So right now we're seeing Tuesday candle traded inside Monday's candle. And this week's candle is trading inside last week's candle. So that's a visual representation of how volatility is getting shrunken. And eventually that compression will lead to an expansion because energy builds up, positions accumulate or distribute, and one of that side wins, whether it's the accumulation or distribution. So there's so many ways this can play out right here. You can see price just bleed and consolidate, and anything like this probably leads to another flush lower and downtrend continuation because trend is your friend. And that can also look like this, where you still have some sort of grind higher instead, that type of consolidation, which then goes lower, price goes up, eventually continuing in the downtrend. Or you can see a squeeze up to take out a bunch of shorts if that's going to be a max pain scenario, maybe with a catalyst. You could actually just consolidate here, reaccumulate. There's so many ways this market could go that you just have no edge here until we're at least near one of the extremes, until you're at least coming to the lows, sweeping and showing signs of holding. Then boom, you've got a potential reversal setup there. Or if we're doing a failure to return, then boom, you've got a higher low setup there. But until then, until you see the big move or something like this with a short squeeze where you can then reject over here and short on the way down, until you see that big move, whether it's up or down, patience is required, guys. Hate to break it to you, but trading is boring. It's not meant to be exciting. Making money is not meant to be exciting. People who want it to be exciting are just tourists. They're just short term gamblers. They're not actually here to be successful in the world because success is boring. It's not meant to be fun. You're not meant to always love what you do every day. No, that's kind of a bit political, but it's worth saying. Trading is a grind, just like anything, and all good things take hardship, and all good things take a lot of grind and a lot of boring days where you just continually show up. And these are the days where you build your systems. You go in my learning center, you watch my videos on trading. You get yourself in the school in day one and you start building your own winning systems, learning how to build systems, learning how to execute live trade with correct position sizing, how to build your own edge. You're not always trading for today's market when it's like this. You're also trading for tomorrow's market, next year's market. If you can build your skills, build them further and further and further, then you're going to be the one that benefits in a month, in a few months, in a year. You're going to be prepared. You're going to be more ready. You're going to be able to risk more and therefore get more reward because you've done the work. You've built the confidence. But those who are just tourists and are always going to just be at the whim of the big moves and the emotions and the news are never going to have that long-term success. And what I say to that is markets are going to be here when we're gone. They were here before we were alive. So if you're serious about trading, no better time to learn now and build your skill, especially while the markets are doing nothing. Of course, I teach everything in this school. You can drop me a message on Telegram if you want to join and you are serious about trading, because the boring times are what builds the biggest opportunities, guys. We've been doing some high time frame accumulating that I've been talking to you guys about in the Discord. All of these periods are boring times. I was around during these times. We flick to something like the 3-day chart even. This is boring. This is something like what we can expect for maybe the coming weeks, maybe even months. But what does it lead to? It leads to huge rallies, huge opportunity once that volatility compression expands. You look at this summer range over here. This is extremely boring. Price just going nowhere, or seemingly going nowhere. But it's accumulation, it's building of positions, it's volatility getting crushed and energy accumulating like a spring, pulling it back, and eventually that spring gets released. Then you get your fun times. So you have to stick around during the boring times, build, improve your skills, learn portfolio management, learn how to accumulate assets long term to build wealth and keep it. And then you can enjoy the exciting times to really compound and supercharge your gains, supercharge your portfolio. But it's only the people that did the work, put in the work during the bad times, the boring times, that capitalize on the exciting times. So, don't give yourself AIDS by watching this chart on the 1 hour, going absolutely nowhere. Take some time to learn. But that's a rant over. Worth a rant when markets are literally doing nothing. So that's everything when it comes to Bitcoin, really. Nothing to look at. Let's look at gold. This rant is going to hurt the video for sure, but it's needed. Sometimes a rant's good for the health. Gold has had a beautiful year. One of the biggest years in decades, actually, when you look at it in terms of percentages. So, again, this is a market which at least needs to have some sort of cool down, whether that's just a sideways period before going up again, or whether that's actually some more extended downside and reaccumulation period before going up again. This is a chart that's had its big volatile moves, so some drop in volatility becomes expected. And you're already seeing that with the early signs of gold topping out as it did over here. You saw the euphoria. It now just needs to rebuild the energy, and then we see where does that energy go? Does it release to the upside or the downside? Very similar story with stock market. So stock market has had a green year. So stocks and gold much better than Bitcoin right now for the year. Bitcoin may finish green just about, but these are going to finish firmly green, barring some massive black swan event in the next few weeks. So stock market's up, everything's good, holders are happy, but when you go to the lower time frames, you're seeing signs of trend weakness. When you go to something like the trend bands and you go to lower time frames, since the tariff crash, these bands were a buy. Every dip, buy. Every dip, buy. Every dip, buy. But that's stopped working now. Bands have actually gone red. Buy the dip hasn't been playing out as well. So stocks have been much stronger than Bitcoin. They've been uptrending and they're only now just going sideways, whereas Bitcoin is actually downtrending. Are they going to now go into a boring period? I think that's definitely the most likely scenario. When we look at these wider markets, what are we seeing? Well, again, it's Bitcoin in this downtrend. It hasn't managed to get above any of these order blocks. So you have a daily order block over here around that yearly open. That's the zone to flip to actually say, okay, this downtrend might be shifting. Potentially it's going to go into an uptrend now. That's the market structure at 92.9K. And then you've got these order blocks here. That can set up a short squeeze. When we look at the other markets, you've got, again, stock markets. So look at the NASDAQ here, tech stocks. It fell down to the September FOMC level. As soon as it reclaimed it, it's led to a bounce. But in between the October FOMC and September FOMC is really just a chop zone. You can see stocks chop around. You can see them take the highs, come back lower before eventually going down. I think we probably can set up something like that. And this can lead to some sort of squeeze, even in crypto through correlations. This is when you can have some sort of risk on move, even during a bearish period, and longs can be the play. But overall, it just ends up then topping out and sweeping the highs and leading to further distribution, because markets don't often go straight from uptrend to downtrend. They consolidate, they go sideways. So I think if stocks start to clear some of these distribution and order blocks, then we can stab at the all-time highs. But only if you see a clean break am I going to say, okay, I'm expecting continuation higher, especially as we're heading into the end of the year where things are getting a little bit boring and volatility is definitely getting crushed. And it's in reaction to rate cuts. They've been bearish, people have been selling, so people are less inclined to now buy. Risk on sentiment is falling as we get towards the end of the year, and that's been encapsulated by the dollar going up, up, up since September FOMC, October FOMC. Recently, it's been staying above this key range low level. It's failed to remain above 100. That's going to be a key level from here now. As you guys know, it's expect chop between 100 and the October FOMC. But the more you get above 100, the more likely this is to actually break out and catalyze a further risk off move. And if you get below October FOMC, then maybe we're going to actually see a risk on move. But in between, expect chop. And it's a very indecisive market right now. And gold. Gold's been pushing up since hitting the October FOMC level, 4K. Is gold going to now start clearing some of these gaps above? We know that can hurt Bitcoin if it does. And I think if it holds above this H4 gap, which it recently failed at, the invalidation of a bearish setup can be a bullish setup. And that can lead to, again, a stab at the all-time highs, which can then just lead to distribution and more consolidation. So markets take time, is what I'm saying here. They take time to unfold, digest, and make their next directional move. It's been up only in the stock market. It's been volatile. Bitcoin, although people may not enjoy it, and this may not have been what people were expecting, it's been volatile. It's been beautiful trading in this downtrend. Markets go up and down. We make monies both ways, but now the downtrend has gone down quite a lot, and we're coming back into a recent demand zone, and we're heading towards the end of the year. You can just see this drop off in volatility that I've been mentioning in all of my analysis posts, and that's really what we're seeing in the markets. And when you look at altcoins, you look at things like Ethereum, it's just nothing interesting here, guys. I mean, it's literally right in the middle of this range that it's been in since last cycle. So for the last 4 years, it's been sideways in this range, and you're right at the 0.5. You're right at the middle, the place of worst opportunity. Don't diddle in the middle is always the saying. It's where a lot of money is lost in the markets. Diddling around the middle where markets can easily go up or they can easily go down because you're at the mean, you're at the average, you're not at an extreme. You need to wait till price gets to some sort of extreme level to wait for high risk to reward. And that extreme level could be over here. This zone on Ethereum, which we see, typically leads to strong reactions on rallies. Could be this zone over here, which we've typically seen, again, leads to strong reactions on rallies. And to the downside for rejections, this is a zone which we typically see lead to downtrends and sharp rejections. So we need to wait for price to get back up to a zone like that. You look at Ethereum, you look at this all-time high, sharp rejection point multiple times again. You need to wait price gets to an area like that. Now we can do business. You don't waste your capital, start overtrading. For what? What's the reason? If your systems are profitable, if you've been a consistently profitable trader, everyone knows who has experience when to sit on your hands and not to overtrade and not to overplay your hand. Save your capital, because your capital is your oxygen as a trader. You can be the best trader in the world, but if you run out of capital, you run out of oxygen, your life force, you're out of the game. It doesn't matter if you're the best trader in the world if you blow up, because you can't trade anymore. So half the game is knowing when not to trade and when not to over exercise your hand. And when you can see the market is not in a good area of opportunity and you just wait. You look at your high time strategies, and as I said, you learn and you improve your toolkits. No better time to get in the school, guys. Drop me a message. That's the full update, full video. Bit of a different one today, but worth going through that rant. Hope you guys enjoyed. Drop a like, drop a comment, drop a subscribe if you did, so that I know you value this content. And I'll see you in morning markets tomorrow.